All right, hello there, speculators. It is Rod, TDG and Futures on Fire. We make software and strategies for active traders and self-directed investors. Hey, this is going to be a review of what's going on for the Sunday and Monday. We have, of course, Labor Day holiday here. So I'm going to just take a quick look at a couple of levels for tonight. We'll take a look at the indices and we'll leave it there. Maybe a quick look at gold. And then thank you for everyone who watched along last week. Did have some issues with the data. I had a lot of issues with CQG and my machine. So I've actually made a little change here tomorrow. Well, I'll be joined by my trading partner as well. So he'll sort of lighten the load a little bit on my machine and on me, my mental state. It was a really great week. I mean, a phenomenal week from a profit perspective, but I decided to go and change some of my charts from the Brickwicks, which can utilize quite a bit of resources, to 5-minute Hakanashi. So I'll talk more about that this week. If you are on trial and you still wanted to take advantage of the charter member deal, it'll be in the link below, somewhere in the description if you're watching this on YouTube, or somewhere on the page if you've been sent this via email. So make sure you go ahead and do that, because those charter members won't be open for a whole lot longer. And let's take a quick look at the S&P tonight. So what we got going on here is a bear continuation pattern. We're below the T line right here. This is the action on Friday. This is the action on Monday, which of course was a holiday, but the markets were open for a little while. And then now we are remaining below our T line. So we can just keep this pretty simple, folks. Bulls got to prove their case by keeping the market above 33.51. And if we can manage to get, I would say, back above the prior session's highs, which would be those highs from Friday, which were 34.84, then it does open up for a move back above 3,500 and move higher. But right now, little change of tone, as especially the Nasdaq is kind of weakened up here. So I would still be favoring looking for opportunities for shorts, for retests of the lows that we saw on Friday. Lots of volatility, of course, last week on Thursday and Friday. Dow Jones, also a bear continuation pattern. I am resting an order to sell 28,593. I'll take about 50 points of risk on that, so about a $250 worth of risk to potentially, if I'm filled there, look for a move back down to T line here. Again, if the market reverses all the way back up. Right now, it's kind of just a neutral pattern. We're right near the T line here. Again, for those of you that were on trial or didn't pick this up, the T line is the trend line that we use to identify trend. It's the 233 EMA exponential moving average. You can apply that to any chart and see what it does for you on that time, on various time frames. Nasdaq. Now the Nasdaq, after being kind of in redonk zone on the way up, has reversed pretty hard, about 1,000 points or a little bit more than that off its lows. Lots of volatility on Friday. This is the Friday session. Bear continuation, nicely downward sloping T line here. And I would also lean into some shorts. I actually put on an interesting position, though, since I still am pretty heavy short MNQ and Nasdaq, and even had a bunch of calls and debit spreads and everything on the Qs. I actually bought some short-dated calls on Friday when we were down right around 307. So I picked up some 290s. Those are about $7 out of the money now on the QQQ. The reason I'm mentioning that is because, again, one of the features that we talked about last week was how you can use these futures markets, S&P, Nasdaq, Russell, Dow Jones, to inform some decisions and entries in your popular ETFs like SPYs, QQQs, IWM, Diamonds. I talk about that all the time. So actually was even selling some puts down here. I think it was the 277s, sold them for about $9, covered most of them for $6, and then covered a few more for $5. So, not quite a double, but certainly 60-70% return on this drop down here. Okay, that's fine. What do we do with the hard right edge of the chart? Like I said, bear continuation pattern. I would probably be targeting a retest. You could crop the wick here if you wanted to. We'll talk about 11,285s. But right now, it would be nice if we could finally see a real true double bottom test in this Nasdaq, as opposed to these 1 or 2 day events. So we'll see what this week kind of holds. It is a shortened week, but again, the worm has started to turn just a little bit there on the Nasdaq. And the opposite's true here on the Russell. Although it's a bear continuation pattern, it is also not able to get anywhere near a break above 1,600 so far. So we haven't seen real significant rotation. So this is a bear continuation pattern. Same thing, I'd be targeting 1,500 for potential buys, It's a tricky market to try to get short this until we get really like sustained trades below these two back-to-back POCs, which is 1538, 1534. I would look for a move back down to 1500, and then from 1500 we could see the 1430s, but more likely I would say is 1500 holds, and we trade in this 100-point range between 1500 and 1600 is what I'd be looking for. Really quick look at gold over here. Let me make this a little bit bigger. Okay, this gold market has been a little frustrating for the bulls, myself included. I've maintained a core position of the MGC for about 2.5 weeks now, and it's pretty profitable, but it's hovering around its entry point at this point since I've scaled out of it on the multiple bursts that we've had higher. But right now, do need to see the bulls hold this 1925s. If we don't, it does open up a retest of the lows from a couple weeks ago when we broke down all the way from kind of 2080s all the way down to 1875 in one of the Globex sessions. But even though it's a bear continuation pattern, and you can, if you have no position in gold, I would look to fade. Any moves below 1955 are probably still shortable. A break above 1955 does open up for some higher prices. So we're in this $25, $30 range here between 1922s and 1955s. All right, just coming back to the indices, that's it for tonight. Not a whole lot of action, obviously, because we had these holiday weekends. It was also 121 degrees yesterday here in Los Angeles. It's just kind of craziness. This 2020, what a year. All right, you can check some more on this page or on the description below if you'd like to take advantage of this join. If you enjoyed the week that we had, the last free week, I probably won't be doing another free week for the remainder of this entire year. So now's a good time to get involved in Futures on Fire and the TTG Pro Trade Room. My name is Rod, and I remind you to stay green and trade like you mean it. Thanks.